A very good morning, my name is Fabio and we're going to be doing a breakdown of all the major dollar pairs including gold. So let's dive into EURUSD first. We are currently situated inside a daily area of demand. So this is a clear sell before a strong buy in towards the upside. And now if we look right, we can see that the market has been slowing down as of today here on EURUSD. Now we've had quite the overextended move again in towards the downside of around 3.7%, around a 400 pip drop without any real pullback besides this one bullish day that we had last week. Going in towards the 4-hour time frame, we can see that we've been following the overall order flow in towards the downside. So yesterday's area of supply over here caused the market again to push down lower, and for today once again this is currently your supply zone that is now in control. So I'm still not interested in buying anything. Obviously there is zero but also just zero confluences to look for buys. So I'm just going to be waiting for a pullback in towards this supply zone, and then inside that supply zone once again we'll be looking for bearish confirmation. Going in towards the 1-hour time frame here, we can also see that there's just nothing but bearish pressure. So we're building some nice equal highs here in towards the downside. So I would love to see those equal highs get taken out before any further sell-offs. Preferably you would want to see a push in towards the highs, grab liquidity, either this high over here or this high over here, and then wait for a 50-minute change of character to then confirm your potential sells once again. Yes, sales are getting lower probability with us being inside this area of daily demand, but as long as the 4-hour order flow remains bearish in towards the downside, there is no need to be looking for anything else than sells. So that's the euro dollar for you. Now going into the dollar index, the dollar index made a nice liquidity grab with CPI. So with the numbers on inflation, a quick push in towards the downside, faking out and then reversing back in towards the highs. Now, if you look at this in a mechanical way, and I just by accident went back to euro dollar, but if we look at this in a mechanical way, what you can identify and understand is that this is the reason why we always wait for a double break, because what you saw here was a push up, a pull back, a push up, and then a push down. So a lot of people would then identify this as your area of supply. However, and with this area of supply, I mean the overall buy off before the sell, so this as their supply zone. But what you need to understand is that that's the reason why you're always looking for a so-called double break. Okay, the double break will then confirm that the trend is actually going to be moving in your direction. So therefore this was just a liquidity grab. This fueled just the next move up. Now once again we are just still bullish on the dollar. The reason for this bearish reaction over here as well was because of this daily trend line. In my opinion, as you can very clearly see, we have this very obvious daily trend line which we have been talking about for quite some time. And then it's pretty obvious that they give like one bearish candle so that everybody starts selling, and then they just screw everybody over. So some nice trendline liquidity to be identified over there. Now what we can see from the dollar, again, we've just continued to push up higher. So for now the bias is correct. We haven't really been wrong. We're now moving in towards this daily supply zone. Let's keep an eye on it because we do have some equal highs right below it over here. So let's see what happens to these equal highs in this daily area of supply. That could cause a short-term bearish reaction, but we'll just be keeping an eye and monitoring what the 4-hour is going to be doing. For now, the 4-hour is not showing any sign of slowdown, and we could pull back all the way back down in towards this 4-hour area of demand and then just continue back up higher again. So as always, just following fractal structure. This is fractal low. This is currently your fractal high. If we pull down, it's only another opportunity to look for longs on the dollar index, which would then result in a shorting opportunity on EURUSD. By the way, guys, if you are enjoying this video and you like me doing these market outlooks every single day, make sure to leave a like, because I have been sometimes wondering, do people actually enjoy me doing this, or should I just start doing more educational videos instead of daily market outlooks? But if you do enjoy the daily market outlooks, please let me know in the comment section down below. Now, looking here at AUDUSD, again, just bearish pressure in towards the downside, sold off further. Now looking here at the 4-hour time frame, what we can see is that this is currently your 4-hour area of supply that is in control. So keep an eye open for what is going to happen over here. To be honest, I'm not a big fan of selling from these kind of supply zones. I much rather sell from this and then use this initial supply zone as liquidity. But if we do form some internal liquidity, and with internal liquidity I mean on, let's say, the 1-hour time frame, what you could potentially identify here is that this is a liquidity high, and that you then take out that liquidity high and see a 15-minute change of character, then you could take a sell opportunity. Otherwise, what I always pretty much just prefer doing is I like to see another push up in towards the upside. We then grab the liquidity above these two equal highs, so this high over here and this high over here, and then we wait for a bearish change of character inside this area of supply, so that we actually also grab liquidity above this fake supply zone. But if we do create liquidity on the lower time frame, then obviously we can look for a shorting opportunity. Looking just real quick here at the 4 hour, you can see that we're now inside this 4 hour demand zone. So this is pretty much the last 4 hour demand zone. If that 4 hour demand zone breaks, then I would not be surprised if we push all the way back down in towards this swing low over here. So this is kind of like the final area of support. As you can see, we tap in and straight away we tap back out. So let's see if supply is going to be in control or if demand is going to be in control. That is going to be the main thing to watch out for today. Going into GBPUSD, we can see here on GU that again we sold off lower. We have the daily here. Remember this old area of demand, as you can see, it gave us some initial reaction but not much. For the rest, for me, GU is still ready to push down lower in towards where? In towards 1.26 130. So for me, there is still further downside expected from GU before any potential reversals. Yes, we could pull back sooner. Then what you would need to see is just a double 4 hour break. So what I mean with a double 4 hour break is that this is currently your 4 hour supply zone because it broke the fractal low over here. So this is now your fractal high. Let's say we break that. Yes, we could then look for a long, but what you need to understand is that you just push up in towards this 4 hour supply zone, and that could then just push the market down lower. So wait for a double break, wait for this supply zone to fill, look for this, then look for this supply zone to fill, and then look for a long back up in towards where? Go back into the daily, and then you will see that this is like your buy before the sell candle over here. That would then be your target. So potential longs on GU if we see like a double break. Otherwise, again, guys, just keep on selling GU with the overall momentum, which for now is clearly bearish in towards the downside. This is a nicer level, just like I explained on AU, to sell from this one over here as opposed to this one. But if we do see lower time frame, again, liquidity forming, then you can already take a short, go into the 15-minute time frame. And to be honest, actually, if I look at the 15 is also better. If we just take the sell from here, because you have so many equal highs here, right? You have all these like trendline liquidity. So it would be nicer to just grab the liquidity above this high over here. You take out the entire kind of like descending highs, and then you look for the trend shift, and then you go short. That is much higher probability than trying to squeeze in a shorting opportunity over here. Go into NZDUSD. What are we seeing over there? NZDUSD has nearly reached that swing low, actually, which I mentioned in yesterday's video. Pretty nice analysis over there. Again, we have been anticipating a further downside for quite some time, expecting a further sell-off. Where is it going to happen from? Could happen from anywhere. We could just see maybe a minor pullback in towards this imbalanced candle over here, or we just sell off from here straight away. If we do pull back today, that would be nice because there's liquidity underneath this low. And if the market already retraces up, that means that we have equal lows, and equal lows are just two lows next to one another, with the low on the left, so the older low, still being open, not being pushed below. So if we do now retrace, that would mean, okay, we have equal lows and we have a nice target to look for a short. So preferably I would want to short from these higher levels, from this higher area of supply. But we could also, again, push from this supply zone, but then look at the 15-minute time frame, like I explained on AU and GU, and then we wait to see, okay, can we form some internal liquidity? So that's what I'm looking at as well for NU. And then last of all, of course, gold. Gold is pretty bearish at the moment. There was a nice shorting opportunity yesterday. Again, guys, remember what I explained. Always look for bullish confirmation if you're looking for long. So we have this daily area of demand. We have this liquidity low. So yes, it is potentially good to look for buys. But then you go into the 4-hour time frame, and what do you see on the 4 hour? On the 4 hour, you see that your supply zone remains in control. So this is your supply zone over here. And as long as that supply zone holds, we are still looking for shorts. So what happens? You see the initial reaction over here. So initial sellers get into the market with this bearish candle, place a stop loss above the highs. They get stopped out, and then the real sell-off in towards the downside occurred. So that is then where you want to be entering on that second liquidity high, and then wait for the bearish confirmation. So then you could look at the 15-minute time frame. What do you see here on the 15? You see here the change of character, break in towards the downside. This is your imbalance candle, which is acting as supply, and then that is where you could have taken the shorts in towards the downside for a beautiful 1 to 3 risk to reward. So some beautiful opportunities. Once again, I'm not looking for anything on gold at the moment. I would say gold is still ready to push down even lower in around 2500. I don't see it reversing yet from here. I'm only following the overall order flow. So let's keep an eye open if there are any more shorting opportunities. Longs are very risky for now. Yes, we have, for example, got this 4-hour demand zone over here. But then again, ask yourself the question, am I just going to try and catch a falling knife and be the big boss of the market and calling a reversal on what has already been a 100 pip drop? No, that's not what we're going to be doing. That's why I would wait and just follow the overall order flow down until you see a real order flow shift occur. So that's it for today, guys. Thanks so much for tuning in. Wish you all a fantastic trading day. We're going to be going live for the London session in around 2 hours. See you there.